Welcome, everyone. Rob Tetrault here from robtetrault.com, portfolio manager here, Canaccord Genuity Wealth Management, and at the Tetrault Wealth Advisory Group. Today's an exciting day. Today, what is it, July 27th, 2020. We got a pretty special guest on. I was just chatting with him off air just a few minutes ago. We got Bruce Croxon, who's coming on the show today. Really thrilled to be having him on the show. He's just figuring out his phone situation, his video situation. He should be joining us any minute here, any second actually. Again, if you're watching here on YouTube, take a second to subscribe to our channel. If you're watching on Facebook, share, let us know your comments. You can put some questions right in the chat there on YouTube or on Facebook. We will see the questions if you do put them up there. We'd love to hear what you would like to ask Bruce. Middle of July, the summer already half over. Where's it gone? It's been a really warm summer here in Winnipeg. But anyways, the markets have been behaving rather nicely. Gold hitting an all-time high today. I'm looking at my screen here above the camera. $1957 an ounce, up 32 bucks today. The TSX Composite closed up 164, closed at 16,161. The TSX Venture, the small cap stocks, they were up 17 points here. They've been rallying late. There's been a bit of a boom in the junior mining sector. Oh, I do see Bruce is there, so I'm going to bring in Bruce right away here onto the show. All right, there's the man, Bruce. Thanks for joining us.
How you doing, Rob? Technology fooled me again. I can't believe it. I was hanging around backstage, but I should have swiped left. I swiped right, but I'm here now.
Good to see you. No problem. Good to see you there. You're out in Ontario today. You're by the Georgian Bay, as I understand.
Yeah, no, I'm up north, and that always provides a little bit of a challenge. But I hear Elon Musk is on the way with a new service that's going to take care of us via satellite for all us northern people that sort of lose a little bit of touch in the summertime.
Yeah, we get some of that too in Manitoba here in the rural areas where, you're doing this with your phone or your camera or your iPad or whatever to try to send emails. And
exactly right. Yeah.
And now with all this working from home change, like this has to be improved, right? We got to be able to be connected all the time. Otherwise, people are not going to be able to work from home, right?
Yeah, and I think, we are making some great strides. There's been all kinds of technology that has emerged during COVID, and I think will continue to do well, which I think is, one of the reasons that tech has hung in there, better than some of the other sectors.
Make new all-time highs actually for a lot of these companies. They're making new all-time highs. Amazon, Facebook, Microsoft, a lot of those companies are making. Shopify, Canadian darling, making some new all-time highs. You're the managing partner, Round13 Capital, but before that you were on Dragon's Den. That's where that was in the heyday. I'll call it the heyday, the glory years of the Dragon's Den. I want to say 2011-ish, 2012, something like that, 2013.
That's right.
Those were some really, really good years. What are some of your good memories on Dragon's Den? Maybe some funny stories that nobody's heard.
Oh my goodness. Well, I mean, the first thing is we saw 230 odd deals in 20 days, right? So people don't realize that show gets filmed back to back to back, 20 days in a row, maybe with a couple of days break in between. And, each pitch is about 40 minutes long. So, by the end of it, you're just, if you hear one more dog leash pitch or, something off topic, your patience is running a little bit thin. But, I remember one year, just as a story, Jim Treliving, founder of Boston Pizza, who's still on the show after all these years. And, I think is sort of a crowd favorite. I remember we got a break, a 3-day break during filming one year, and he went south and came back about 8 shades darker than he was when he left. So, it was, if you look at the edits that year, because what they do is they take shows from day 1 and they mix them in with shows from day 8 and day 14, and that's how they put the shows together. So it looks like you've got 2 different shades of the same guy. That was, if you look at that, I think it was 2013, Jim's got like all kinds of makeup caked on him every session just to try and make a brown man look like a white man again, which isn't an easy task.
Yeah, we had Sorry,
my memories of the show were great. I think it was a good platform for Canadian entrepreneurs to take a shot. And I really enjoyed the working relationship I had and still have with Jim Treliving and Dave Chilton, the wealthy barber, and Arlene. And, it was a really good, fun group to hang out with. You notice I left Kevin out of that.
We had Vincenzo Guzzo on the show a couple of weeks ago or a month ago or so, and he also had some high praise for his time on the show. He's still a dragon, but he had some anecdotes as well with respect to filming and how intense it was as well. Before that, some viewers might not know you made most of your early wealth in Lavalife. So I mean, you sold that. This was back in the 80s, so. This started as am I correct that it started as a phone kind of dialing service, match kind of Tinder?
Started as a brand called Telepersonals, where we were basically using the phone lines to do what the internet does today. And that sort of morphed in the mid 90s to, the web personals as the internet started to be commercialized. And we realized that whether you're using the phone or the internet, you were still trying to, achieve the same objective, whether it was a date for Friday night or a lifelong partner. And we rebranded both services to Lavalife around 2001 or so. And then we sold the company to a NASDAQ traded company in 2004.
Yeah, just under 200 million, not a bad paycheck. And then I would imagine that some of the stuff you learned in doing those deals, basically that was a bit of a venture cap deal when they bought you out, probably led you down the path of Dragon's Den. And so what was the best deal? I know you did the coffee one that was really, really good. And then you got, there's a couple other deals that, you participated on Dragon's Den, you made partnerships and you actually, that flourished. The coffee one, I know. Any other ones that really worked out well?
Well, and then and you raise a good point, because when you watch that show, when you shake hands, everyone assumes, well, that, you're making a deal, but it works just like any other deal. I don't know how many times I've made an investment just by meeting somebody, over a coffee. It usually takes a little bit more time and you do your diligence. So I probably shook hands about 60 times and closed 12 deals over the 3 years that I was on the show, which was a pretty high percentage. And, some of them are still, ongoing. I mean, there's one out your way called Carbon Farmer that does offsets for plants trees for Marriott hotels. If you check in and you don't need to take advantage of daily washing, they'll plant a tree on your behalf. And I had a number of ones that were good and still going, but the coffee one is the best one to date. I had no idea before getting into that, being a tech guy, how much margin there is in a cup of coffee. And you don't see too many high-end independent coffee shops going out of business. And then the reason simply is, at least pre-COVID, the reason is that there's a lot of margin in a cup. And I totally did not realize that till I got involved with Balzac's Coffee.
Yeah, it's a little bit of a different deal than people would expect you to make, because you'd think, Bruce for Lavalife, he gets the digital world, gets a digital space, he's going to do the tech deals, and here you are doing a retail high-end coffee shop deal that turned out great for you. So good on you for that one.
I do like coffee though, so I was at least sticking to what I love.
So that's one thing I don't drink. I don't drink coffee. I don't get the attraction to the $9 latte, but I know everyone else does. So I'm guessing it doesn't cost $9 to make a coffee. So margins are good there for sure.
You're in about the 13% of North Americans who don't drink 1.7 cups of coffee a day. So the rest of us are addicted. So consider yourself lucky.
I guess that's good. So you left Dragon's Den, I think, to kind of focus on Round 13. Round 13 is a venture cap play. Do you mind just telling us, our viewers, real quick, kind of what venture capital is generally and how you guys do it a little bit different?
Sure. So basically, Round 13 is a fund that I manage with a couple of partners. We've got about $350 million raised that we focus exclusively on Canada. So that would be one way that we're different. We don't do a ton of startups. So we're really looking for those technology plays that are mainly private, where we can come in and provide growth capital to something that has already proven their product market fit and needs $5 to $10 to $12 million to scale. And when we got into this, and I would argue still to a certain extent today, That is a hole in the Canadian marketplace. We are very good at getting behind ideas early, but ironically, when the risk starts to come out of them, the capital in the country dries up a little bit. So we're trying to fill that void. We have about 18 investments we've made in the country, and actually just one in Silicon Valley. So we've stuck true to our roots that way. And we're a very being operator led. I'm an operator by trade, and I'm learning the investment game from some very experienced partners that I have. But we're very hands-on once we make an investment. So that's how we may be a little bit different than, some of the more passive funds that will pick a stock or pick a company and hope for the best. We really do roll up our sleeves and get involved. And, the good news is it's technology. And, there's not too many industries that aren't being disrupted by technology. And, I'm also extremely bullish on Canada's place in the world and our ability to compete on a world stage. We've got the best engineers in the world. The money's starting to flow. We've got sort of returning second and third time entrepreneurs that may have gone to live in the Valley for a while, but you know what? Canada's a pretty damn good place. And I think it's the best country in the world to build a business. So I think more and more people are starting to feel that way.
Is it mostly because, so you mentioned capital, you mentioned people, and then you mentioned education, so like good engineers that are coming back. Are those kind of the tenets to get solid venture cap and solid growth?
Yeah. Well, and plus we don't have Trump, right? So we don't, we're an open border. We jumped. The one thing we did a really good job of, we jumped on that. As he closed his borders to immigrants, we opened up. And I can't tell you the number of, first generation Canadians that are in my office, hungry, right, talented, and extremely strong work ethic. And, it was always the case that, look, we're only a certain size as a country. How are we going to compete with the U.S. with all those resources? And for a long time, it was the capital that's being addressed. But the main thing that we need to do is to continue to attract talent, because we sold short a lot here in Canada, right? You get it to a certain stage and you're looking around and you don't have the vice president level experience in order to scale, not enough people that have been trained in scaling, that have been through it before. Well, that's starting to get addressed, not only by entrepreneurs coming back and reinvesting in the country, but by experienced, talented people that we're letting in over the border to say, look, here's a lot of reasons why you don't want to live in the U.S. right now, even if they'd let you. Come on in, because we need you.
I'm here with Bruce Croxon, managing partner of Round13 Capital, round13.com, entrepreneur, investor, Dragon, former Dragon. We're talking about how Canada's place globally right now on the venture cap space and I guess the digital / tech growth sector that we've had here in Canada. Most people think Canadian Silicon Valley, they think kind of Waterloo area or maybe Toronto. Are there any other hubs that the viewers might not know about that are kind of growing now significantly that you're aware of, or that?
Yeah, for sure. And, don't get me wrong, the Waterloo, Toronto, Ottawa corridor is still, Montreal is still where the majority of the action is. But, one thing that tech has enabled, and we're proving it right now, during COVID, is the whole remote work thing. You can pop up an idea and get it to a certain stage, without having to be in one large urban spot. And, aside from that, you've got an example, I guess, would be, a guy named Jason Atkins, who's building a company called 360 Insights in Whitby, and he's up to, 300, 400 people. And what happens is, as they get that experience, they start to spawn little ecosystems too, right? So that's the way it goes. Vancouver's good. I mean, they've got some winners out there now. There's a company called Article that's really making headlines in the millennial market for online e-commerce furniture that they design and distribute themselves. We all know, we've heard of Hootsuite out of Vancouver. So Vancouver's had some good ones. They're leading, I would say, the crypto market. Crypto Kitties, this concept came out of Vancouver. Halifax is still popping up the odd idea. They've got a nice ecosystem there. And of course, Ottawa, you know, a company like Shopify takes off, right? Let's just think about what that does. I mean, we can talk about value, whatever, you know, there's people that believe in the value of the public market valuation of that company, and there's people that are intent on tearing them down. But whatever way you look at it, that kind of wealth generation from people that have become involved in that company early, there are entrepreneurs in there, right? And a number of them are not only spreading their wings to bring their talent to other startup companies, but they're doing it themselves. And that's how it happens, right? And, you know, flash forward 3 or 4 years, if we've got another 3, 4, 5 Shopify type success stories, that's how we continue to swing above our weight. And all I'm saying is I think we're in a better position to do that today than at any other time in my career since I started here, you know, doing what I was doing in the late 80s, as you mentioned off the top.
Shopify, I mean, the people that want to tear it down and the people that want to build it up, regardless what side you're on, we do know one thing: the market does not lie. You could buy a share today for $1,350 or whatever it is. I think it was up big today. I think it was up 4.5%. That's the value of the company. That's the value. We have a market. The market is pure. It is accurate. It's a reflection of what people want to pay for that stock today. So it's the most valuable company on the Canadian stock market. It has done wonders for our country and for you know, I think the future. This wealth that's created is one thing. These ideas, the engineers that are coming, the talent that's coming to Shopify, I think it's fantastic. I think you missed one hub, Winnipeg, Manitoba. We got a great company, Bold. You know, I think you know those guys a little bit.
I know them well, and you know, I can't believe that I've missed them. I'm so used to like 90% of the time I'm wearing a Bold T-shirt.
I know. I saw you on the Raptors game, and you had your Bold hat on.
I know, during the playoffs. I'm such a proud supporter of that company. I mean, Winnipeg, right? Skip the dishes and Bold, right? And and you know, knocking the ball out of the park. Great culture there. You know, people, when they go to work at Bold, they don't leave, right? It's a great place to work, and they are, you know, the beneficiary of how well Shopify has done as well, because, you know, they're serving that market, and they work very well with Shopify. So yeah, kudos to shout out to Bold people. Can't believe that I didn't put you in the top 2 that I just mentioned there, and that. You know, it's no slight, because I'm on their board, and I know exactly how well they're doing, and they're doing great.
No, I know. And we had both Yvan, the CEO, and Steph, the COO, I believe. We had them both on our show here a couple months ago, talking about their success story, which has been unbelievable. You know, from their little basement to quitting their jobs to having, I don't know what they have now, like 300 employees or something. It's an unbelievable, and it's really neat culture. You talked about culture. They bring in lunch for all the staff every day. They got the pinball machine and the buck hunt machine in the entrance. They got, you know, nap rooms and it's just such a great setup. I've been there a few times. They're hitting it out of the park, and people want to work there. So good for them. They look
after their people. They look after their people, which is a big key.
They do. So you talked about some of the hubs that are happening in Canada. Now you also mentioned as we're seeing now, e-business and the way to start up a company. It used to be you needed space, you needed to do this, you needed to attract people. Has there ever been a better time? I don't know if better is the right word, but a better time to start a tech play than 2020 right now?
No, there hasn't. And it's a bit of a double-edged sword. So I'm glad you mentioned that, right? Because as you said, the costs have come out of the system to an incredible extent. If you gave me, you know, 4 or 5 smart programmers and 1/10 of the capital that I needed to start Lavalife back in the day, I could duplicate that, and I'd be in business in, you know, a fraction of the time that it took us to create that code and launch and everything else, and expense. So yes, it's never been a better time in terms of ease of entry. But what it also means, conversely, is that when you get an idea, when you land on something that's working, that barrier to entry is very tough to establish, right? It's no longer a technology barrier to entry. It's a sales and marketing barrier to entry. So that means when you get a sniff of something, you got to go, right? You got to put the pedal down, and you can't waste time. You've got to really focus on scaling, because that's the thing that's going to keep competitors out. Now, thankfully for me, we're investors, and it's tough to really go fast without taking outside capital often, right? So it's a perfect time from that perspective. So, but in answer to your original question, it's never been a better time, and it's never been a tougher time.
Right. And I just think of the other thing is guys like you, Round13, and other guys and gals that have made money in a tech, selling a tech, some of the Shopify guys, there's no capital, and there's capital and opportunity that didn't exist. I don't know, I'm gonna say 20 years ago, maybe I'm wrong on that, but there's certainly a lot more capital that is willing to invest in Canadian tech than ever before.
No question. So that is the part that is being addressed, where if you went back even a decade ago, the few venture capitalists that were around, they were like kings. You lined up and you just, I'm so thankful to get a meeting, and that thing is swung on its head. Entrepreneurs are the kings. We owe our existence to them, their talent, their hard work. So one of the first things that I made sure we recognized at Round13 is that, we're in the service business, right? It's not like they're not doing us a favor by coming to see us. We need to earn their trust and respect. And if we're lucky enough to be able to back them, we got to work our asses off too. So, that's how the whole thing has changed. There is capital to be backing good ideas now, and money's money. So my advice to entrepreneurs that are looking to get capitalized, put as much thought into who you choose as a venture partner as you do to who you want to be your business partner, because we're going to be working very closely together. So
the typical, sorry, Bruce, the typical deals on that front. So you're talking about advice. I think this is very important. I was going to ask you about advice. So, 4 guys or 2 guys or 2 gals start up a company and they grow it. And then the space where you or other venture cap guys would get involved, typically the size of ownership, what's typically the take that you guys would want for it to be valuable for you guys? Is it 10%? Is it 30%? Is it how much do you typically chew off to take as a kind of a silent venture cap position?
Somewhere between 10 and 30%.
Okay.
Basically. So if we end up in a control position, it means something's gone wrong, right? We're backing teams. And you may have a few things in the deal documents that give you some element of control, but it's very clear that we're counting on the entrepreneur to do what he or she said they would do. We're here to help, but we don't go in with any huge ways to control their behavior or anything like that. So it's really important that we do our work up front.
What about balancing the interest of getting a payday, for the entrepreneurs themselves, right? So they've put their sweat and equity into this company. They've never seen a dollar. They've paid themselves maybe a salary for a while, but only recently when they've actually had growth. And now they're kind of looking at the first kind of real paycheck for a while. Are you seeing more deals where it's exits for the owners, or is it really that they need the capital to grow? Or are you seeing both?
We're definitely seeing both. I mean, we specialize in growth capital. We want to pick a company up at the point where they've got customers. They've got enough customers that we can go in and understand what the customer behavior is, what their propensity to stick around as a customer will be, how much it costs to get them, what they're worth. If there's enough history there that we can come in and do our work, and there is a big enough market to continue the growth at about the same metrics that they've established so far, we get very interested. Our exit comes together when usually a strategic partner comes along, looks at what they're doing, and thinks that they would be a good acquisition. Occasionally you get an IPO-able company. And increasingly in Canada is looking like, I think we'll see a few more of those off the back of Docebo and Shopify and some of the ones that have done well recently. And Canada's hungry for it and they support it well. So I think once our money goes in, we're pretty clearly aligned. I will say, and we're dealing with a situation like that right now in our portfolio. Once in a while, what looks like a good exit to an entrepreneur that has never seen a big payday, doesn't look like a great exit to us. And we may think that there's all kinds of space left for growth. And, there may be a difference of opinion there. But even if you had an instrument in the deal documents to, force somebody to a minimum, you're not going to do well forcing someone to do something that they don't want to do. It's just not the way it's going to work. So, does that make you more likely to want to back second and third time entrepreneurs? Maybe. It's a factor, right? But getting on the same page is a big part of what we try and do during diligence.
It's kind of like the athlete that accepts below market contract just because he's never really had any money, and now he's getting offered 5-6 million. Maybe he's worth 7-8 for longer term, but he's taking 5-6 just now because that's his first payday.
Right.
I'm a big sports guy, and you are too, I think, right?
Yeah, I am. I love it. I'm anxious to see the boys back and see what's happening.
Yeah, me too. You're also an avid outdoorsman. Before I get to that last question about outdoorsman, I know we're running low on time, but I definitely want to ask you about advice for entrepreneurs today. So you've said a few points already. Specific advice that you can give to young entrepreneurs, mistakes to avoid, perhaps stuff that you've seen, anything that you can give that would be of value to them now as they're kind of starting up their company in their parents' basement or in their own basement or whatever it may be.
Yep. So yeah, really quickly, pick what you love to do, because you're going to have to work a lot harder than you possibly imagined. If you're trying to start something up, it's not easy. So if you love what you're doing, and you're grinding away on a Sunday, maybe it doesn't feel so much like work. And the second piece of advice I would give is, things go in cycles, right? So when things are going really, really well for you and your company, don't get too attached to that feeling, because it ain't going to last. There will be a tough time ahead. But similarly, when you're in the trough and it doesn't look like there's any way out, if you hang in, you've got the right people around you, you paid enough attention to the people that you put around you, which is emerging for me after all these years as the number one learning. You can't put enough effort into making sure you've got core value fit with the people that you work with. So if you've done that right and you continue to do the right things, you will come out of the trough as well. So it's called a cycle for a reason. You got to grind sometimes, and things do come around. And likewise, when it's going real well, don't get too attached either.
That's kind of what I've always preached, and I'm glad you say do something you love, because that's how I feel when I'm here on the weekends at the office, and and I just love what I do, and it does not feel like work. So that's definitely a very important point. Hey, what sectors do you think are really that are maybe not on the radar, or subsectors do you think are going to be dramatic disruptors in the next 3 to 5 years? Something that maybe no one's talking about that you're seeing?
Oh my goodness, that's a very good question. It's funny. I'll just throw one out because we had a raucous debate about it last week in the office, and it's crypto, right? Did I just lose you guys?
No, you're good. You're good.
Okay, good. My camera's frozen, so ignore that. We debated crypto and whether blockchain's finally going to find its place and become fully commercialized. Definitely what this work from home stuff has done is it's put a premium on communication applications, things that make the business of operating a business more efficient, things that take time and cost out of the system. The banks, so funny, like I was under the impression they were a lot further along in their journey to the cloud than they are. Because what happened was when they all had to go work from home, they had to book time to get onto the VPN, because a lot of them still have the old enterprise technology that they have not migrated yet. So anything to do with migration to the cloud, I'm stating the obvious now. That's not a real big unknown, but it's a little earlier than I had given it credit for in the past.
How do you feel about psilocybin, those recreational mushrooms? You think that might come to Canada?
I think it's going to be big. I think it's the tendency is to, when you first hear about it, is to delegitimize it, because we all sort of go back to our youth and immediately think about magic mushrooms, and but I think they're having incredible early breakthroughs in the ability of psilocybin to address things like depression, anxiety, by getting you into different sections of your brain that you may not have visited before. And, who are we to say that the remedy, couldn't be natural? It has to be something man-made, so I'm all ears when it comes to that. Don't get me wrong, I'm going to stay focused on technology. But off the corner of my desk, I'm, backing a few people in the space. I think it's going to have its place for sure.
Microdosing is a word I learned last week when I was watching a road show. PTSD apparently is very, very good for PTSD as well. I want to ask you just quickly on the personal side. I know you're involved in some charities, and I know you're also on some boards corporately. Anything you'd like to share with the viewers for us to go see, or that's of interest to you?
Well, it's funny. I'm sure. Thanks for the opportunity. I mean, we've built 22 elementary schools in Jamaica through a charity called Helping Hands Jamaica, HHJF, Helping Hands Jamaica Foundation. And we've got a gathering coming up this fall in Toronto. We do an annual walkathon. So if any of your viewers are interested in supporting bringing education, the great equalizer, that not everybody has equal opportunity to access. That's my maternal homeland, and I've spent a fair amount of time down there, and I'm proud of the work we're doing in building schools on the island.
And the sprinters, geez.
Oh my God, yeah, no, the country swings way above its weight there. There's no question.
Yeah, the website is below. The ticker is on there, Helping Hands Jamaica. If for the viewers, feel free to click on that. Any last piece of advice or words of wisdom for our guys here, Bruce, before I let you go?
No, just, I think the tendency during periods of crisis is to think that, the world is going to dramatically change. No one's ever going to go back to the office, that kind of thing. And in my experience, we always get through it. So hang in there for those of you that are struggling. And B, in my experience also, the change is never as dramatic as we think it's going to be. So keep doing what you're doing. I love what you do on the show too. So thanks for having me. And it was great to share some time with you this afternoon. Apologies for the tech hookup and whatever quality that caused. But I'll get better. I'm getting used to this remote.
You are the tech guy, and you can't. Who would have thought that you would swipe left instead of swiping right?
Every single engineer I've ever worked with, they laugh at me all the time.
All right, thanks so much. Again, if you're watching on YouTube, take a sec to subscribe to our channel. If you're watching on Facebook, please like, follow, and share. If you'd like to book a no-obligation consultation, please go to www.speaktorob.com. We'd love to have a chat with you about that. Again, I'm Rob Tetrault from robtetrault.com, portfolio manager here at Canaccord Genuity Wealth Management and at the Tetrault Wealth Advisory Group. It was a blast and a fun time and a privilege to chat with you today, Bruce. Thanks so much. Have a great day, all. Thanks for tuning in. See you next Monday.